First of all, what's behind this latest leg higher?
Well, thanks, Kelly. It's great to be with you guys. I'm minded to think about a conversation I had a few years ago with Kevin Walsh, who you may know formerly with the Federal Reserve, and a friend to us here at CoinShares. And he made a prophetic statement to me at one point when he said, you know, the door to crypto was opened by the 2008 quantitative easing program. And he went on to say that the future of crypto would be determined by how we unwound that QE program. And while both of us contemplated that over a cocktail, neither of us could have conceived that QE would end up tripling, not unwinding. So now, you know, and largely due to the global pandemic, Bitcoin's entered a new era. It is driven by the narrative and the drive for inflation-resistant investments. It's driven by digitization because Bitcoin is a digital store of value and because people are looking for that. And it's driven a bit by the fact that people are now a little bit more accepting of the volatility. And that's come about partly because Bitcoin's volatility has been steadily declining over the last few years, but probably also by the fact that the volatility of other asset classes has proved to be a lot more volatile than people expected.
Yeah, fair enough. Danny, let me ask you, we now have projections of Bitcoin going to $50,000, $100,000. So on the one hand, you have people who want in for that ride. On the other hand, well, relatedly, you have all these institutions now which think, you know what, we've got big name investors who say it's not insane to have exposure to this stuff, and we're going to put a few percentage points of our portfolio in it. Is it replacing gold, you think? And do you game around in kind of these predictions of what Bitcoin could ultimately be worth?
Well, there's never a lack of bold predictions for the price of Bitcoin, but let's just take a look at the overall environment at the moment. I mean, sentiment is electric. There's no doubt about that. I was minded to see the recent conversation between the former Bank of England Governor Mark Carney and Larry Fink, the CEO of BlackRock. And I would describe this as a conversation between two Bitcoin deniers, one of whom was coming to his senses. And it was Larry Fink who was pointing out the just enormous interest that BlackRock had been been sensing over its social channels and websites. That's one demand pull effect that's going on. Companies like Square, like MicroStrategies, like PayPal are outperforming the market because they are going public with their exposure to Bitcoin. At CoinShares, we've done research showing that 4% allocation to Bitcoin in a traditional balanced portfolio, and it has some very interesting performance and diversification benefits. We've seen market wizards, as you mentioned, like Stan Druckenmiller, Paul Jones, Jim Simmons, Dwight Anderson, all becoming interested in this asset class. So yeah, there is definitely a narrative at the moment whereby this sort of perceived career risk of having Bitcoin in your institutional portfolio as a portfolio manager is fast migrating into a career risk for not having Bitcoin in your portfolio, and that's a really stunning development.
I think that is perfectly well stated. You're not going to get fired anymore if you had some Bitcoin, but you might get fired if you didn't. And that's a powerful thing. Trillions of dollars turn on that distinction. Danny, it's been good to have you today. Thanks so much.
You're very welcome.
Danny Masters of CoinShares.
Shepard Smith here. Thanks for watching CNBC on YouTube.